Market watcher Jeff Sica. I got a bone to pick with you.
Oh, no.
Oh, yeah.
Uh-oh.
Not a turkey bone. You've been on this program for a couple of months now saying, here it comes, here it comes, here it comes. We're going to fall off, not fall off a cliff, but we're going to go down. We're going to go down. You kept on saying it. What happened? We're at 17.8.
Well, here's what happened. We started going down. We had some pretty violent sell-offs. What happened and what the investors and especially the bulls need to be thankful for is Janet Yellen stepped in yet again, and her cohorts with the Fed stepped in with this very dovish stance. They're going to artificially suppress interest rates for an extended period of time. Most of us, like myself, are looking at what Janet Yellen is doing as just prolonging the inevitable. So we thought that they were going to go for the credibility and do what they said they were going to do, but they didn't. And as a result of that, we get this other false rally.
You don't think they're going to raise interest rates next month?
No, I really don't. I think that,
and the market is in line with what you're thinking? No, they're not going to raise interest rates?
No, I think they're absolutely not going to raise interest rates.
And
I think
that's why stocks are strong. It's the Fed soft-pedaling the interest rate increase. That's what's doing it.
Yeah, I know. I listen to everything she says, to everything Janet Yellen says. And the bottom line is she continually hedges herself to make it clear that she's very concerned about growth. And when we have all these bad geopolitical events, when we have these dismal economic reports, it's very clear that she's paying attention to them, but she's scared to death. Because if she raises rates, you have the whole world that's right now in peril, and she doesn't want to tip the scale.
She's in a terrible corner.
Yes.
Okay, now the Fed painted itself into that corner.
Absolutely.
I mean, you're damned if you do and damned if you don't,
right.
But they're in that corner. So you're not wrong. You're just postponing the day when you're right.
Exactly. That makes me feel better about myself. I'm not wrong. I'm early. I'd rather be early than late. So,
but you're sticking to it.
Absolutely.
When the Fed does turn around and when it does raise rates, this market heads south big time. You're sticking with that?
I'm sticking with it. But what's going to happen before then is that people are going to start to really look at what's happening in the economy and whether or not, I mean, the revenue was terrible last quarter. They're going to look at what's happening in the economy. They're going to look at what's happening in corporate America, and they're going to say this rally is unsustainable. The fact that the worse the news gets, the better the market does. If that doesn't concern people, that I don't know what will. And that's something to look at.
So should I sell my Microsoft today and sort of walk away from the market until way into next year?
Well, I would say that if you've made money in this market, and it's important at this point to not be greedy, to take some of your gains, be willing to sit with the dreaded cash and wait. Because if you don't, you're going to have no money to buy in.
Jeff, there's nothing dreaded about cash. You know what I mean?
Well, the
I'm
market,
a new American. I understand these things.
When you have the average mutual funds with zero cash, with a lot of, there's not a lot of people holding cash right now. So I would say that cash is king.
Okay.
No question.
The very articulate Jeff Sica. Welcome back. Have a happy Thanksgiving. Good luck to you.
Thank
All right.
you.
By the way,